Hello and welcome to Investing Confidential. They call Japan the land of the rising sun. I don't know why, but that's what they call it. There's been a lot of talk about Japan recently for obvious reasons, but the reality is that its leadership, okay, Japan's leadership has led the country 30-year stagflation. And up until recently, nothing's moved, okay? Now they're moving. And unfortunately, the same playbook that Japan used, the Bank of Japan, Japan government trying to spark the economy was a disaster. It never worked. And this is the same playbook that the United States and other Western countries are using now. And I don't understand why these morons are copying a failed playbook, but they are. So let's just see what the West is headed for. Okay. Japan had a massive stock bubble back in the late 80s. After that stock bubble, and by the way, talk about stock bubbles, things were trading at 100 times earnings. I remember analysts saying they were cheap. Real estate was trading, literally 100 times its replacement value, and people were saying, hey, it's still a buy. This is what kind of craziness was going on back in 87, 88, and 89. But the market crashed, the real estate market crashed, stock market crashed, everything crashed. And the Chinese government has been trying to grow the economy ever since with this madness of QE and interest rates and all this and what we call financial repression. It just didn't work. Okay. Look at the chart. It just doesn't work. The economy has never grown. So artificial lower rates, how do you do it? Well, you lower rates as low as you can. You buy bonds, you keep buying bonds. They're just they just want to, bang rates down to zero, negative, deeply negative rates, hoping to spark growth in the economy. It doesn't work. It never worked. Most large corporations became exporters. Look at Sony. Look at Toyota. They all essentially left Japan. I mean, they're still there, but they opened operations in the US and all over the world, and they exported jobs outside of Japan. Japan, most institutions, asset managers, Japanese and individual investors, they have moved their money overseas. They fled for better returns. If you're going to give me zero return, I can get 5-6% in the US. I'm going to do that. Okay. And the Japanese yen has been weak for quite some time. So the Bank of Japan has stepped in, and they continue to be the only buyer, essentially the only buyer of these treasury securities, what they call JGBs. All right. JGBs are Japanese treasury securities. So today, you've got, you had COVID, you've got global inflation now. So the chickens are coming home to roost. Okay. There's no way out of it. And now we're seeing finally a reaction, but it's too late for them. And they're going to put themselves into a massive quandary. It's a problem for Japanese investors also. They've had big losses in global bonds. And now that they see their local rates going up, they're losing money offshore. They've got something to do here, and this is what everyone's worried about. Okay, so when you see all this news about Japan and the JGBs and the Bank of Japan, and you don't understand it, it's all about the movement of money. Okay, so the Bank of Japan had changed policy, right? They had a cap around 20. Imagine a 20-year bond at 25 basis points. I mean, essentially, you lose money. You invest, and that's what the bank. That's what the central bank, the Bank of Japan, has been doing. So they changed policy to adjust to inflation to 50 basis points. It created a disaster. The bonds went quickly up, surpassed 50 basis points. The yen strengthened, stocks went down, and you've created now a situation where hedge funds and all kinds of investment funds are smelling blood, and they're shorting, and they're challenging the Bank of Japan. Okay, why is this significant? Well, here's the reality. There's between 2.5 and $3 trillion US dollars in that Japanese have invested in US bonds. Okay, hundreds of billions in other markets like Australia, the EU. If we get into a situation where they have to sell for a lot of reasons, and we're getting close to that situation, we could see a massive sell-off of U.S. corporate debt and government bonds. Okay, this is the same effect as raising rates. It could be worse. You're going to see rates go higher. You're going to see bonds get wiped out, And look, because essentially the bond market is illiquid. We've spoken about this before. Used to be the U.S. bond market was the most liquid market in the world. Everything's changed. There's no more liquidity anywhere. Okay, there's no liquidity in stocks. There's no liquidity in bonds. There's no liquidity anywhere. So something like this, a massive movement out would really disrupt the financial markets in this country. Bad news for global bond markets, essentially bad news for consumer. And last week, the Bank of Japan, the outgoing leader who's been there for a while, the stodgy old dude said he's not going to raise a new policy, or he's not going to, basically put a cap even higher. Well, things pulled back a little bit, but no one believes this guy because he's leaving. Don't believe him. He's leaving. He's some other moron's going to jump in there. We don't know what his thoughts are. But look, also inflation came out in Japan, 4%. So you got 50 basis points bonds and 4%. You've got very negative yields, extremely negative yields. And as we've shown before, you cannot get out of anything until you have positive yields. Negative yields don't work. They never worked. Okay. And what does this also mean? It means that the Bank of Japan today, like most central banks, but Bank of Japan in particular, they're insolvent. They're bankrupt, absolutely bankrupt. From a balance sheet standpoint, they're out of business. Obviously, not going out of business, but they are out of business. What are the implications of all this thing I've talked about? Massive selling pressure equals higher rates potentially. Okay. And already weakening an already weakened economy. And this is going to be not just for Japan, but this is the US. Okay, I'm talking about the risk in the US is selling pressure, continues to higher rates, weaken economy, but there is a silver lining in all this. Japanese stocks are actually cheap. Okay. The market went down, but offset by a higher FX rate. So if you see this happening, it's going to affect the US market, but Japanese stocks are looking better and better. And again, most of their assets, most of their business is overseas. So as a stock market participant, I know most of you are that are watching these videos, you have to be aware of this. This is going to affect your markets, meaning the U.S. stock market and the U.S. bond markets in particular. So you really need to pay attention to what's going on in Japan. So for all you investors, be careful out there.